Hi fellow freedom builders, and welcome back to the channel. Now today's video is about a topic that I've gotten quite a lot of requests about. It is not directly about stocks, but it is about building freedom, and it is about investing, or actually more about trading. As some of you know, I am doing quite a lot of trading on the site when I'm not investing in stocks or using option strategies. I am and have been for several years. I've been trading in the Forex market, a bit of commodities, but mostly currency pairs. Now, I know that to some of you that is a completely no-go area, and I will almost say that I can't recommend it. I actually can, but it is a bit tougher to learn than just buying a stock and hoping that it will go up and pay some dividends. But it is possible to learn. I'm not really teaching it anymore. I've gotten many requests about teaching it, but at some point I might point you in the direction of some very good teachers, so we can come to that later. But today's topic is about prop firms, and you might be familiar with the term prop firms. They have some fancy names: FTMO, the 5%ers, the funded trader. There are 10, 20, 30, 50 of them out there, and it has really exploded in the last couple of years. Now, what is a prop firm? Well, originally a prop firm is actually short for proprietary trading firm. And many years ago, if we talk about 20 years ago, 25, 30 years ago, the prop firms were a place where you were often taken in. They had some physical locations you were taking in, paid for some education, and if you were good enough, you could get access to some of their real capital and trade their money. Then you got a cut, they got a cut, and that was basically how it all started. However, today it is a lot different, because a new branch of prop firms have emerged, and they are very different from the old ones, because some of them offer a bit of education, but basically everyone can come in and get access to trade their money. Now, of course, there are a couple of caveats here, and first of all, as it says here, it basically means you can trade with other people's money, it should be. And then I've written maybe, because actually in many cases you're not really trading with their money, but I'll get back to that in a second. Now let's take, for instance, one of them called FTMO. When you go on to their website, it says Forex traders wanted. Trade our company's capital. Receive up to 90% of profits. We cover the losses. So basically the concept here is that you get into one of these companies. I'll tell you a bit in a couple of minutes on how you get into these companies. But you get into these companies, you get to trade their money, and you keep 90% or up to 90% of profits. Many of them are somewhere between 70 and 90. A couple of them actually go up to 100%, which might wonder you a bit, since what are they making their money on? But I'll get back to that later as well. First of all, let's just have a quick look at this capital here. Trade our money's capital. What it says here, if you hover over this with your mouse, it says the offer to trade for our partner proprietary trading firm is made to clients who successfully pass the evaluation process. I'll have a look at the evaluation process just in a second. To avoid any confusion, FTMO provides its clients demo accounts with virtual capital in all stages of the cooperation. Now, what that means is that with FTMO and with almost all of the prop firms, there are a couple of them that actually have some proof that you're trading with their real money, but with most of them, you're actually not trading with real money. You are, for instance, going long in the currency pair euro-dollar, and you make a profit. Let's say that in one day you make 1% in profit. Now, you have actually not traded with real money. You have just been trading on a demo account. But as I say up here, does it really matter? Because what matters is that these companies are paying out their share of the profit. So if, for instance, let's have a look here. This is one of the challenges. I'm sorry if it is a bit blurry, I hope you can see it, but otherwise you can go into the FTMO or any website of these. I should say right away, I just picked FTMO because it's one of the largest and the oldest. I have no affiliation with FTMO or with any of these. You will not find any smart link here so that I can make money of you signing up. I really don't care where you sign up. And actually, as I'll show you in a bit, I almost recommend that you don't do it unless you are really, really certain that you're good at what you're doing. But let's just have a quick look here. This is in US dollars. I have chosen the account called normal. There's also one called aggressive. And then I've chosen different balances here. 10, 25, 50, 100, 200,000 you can pick between. Now this is how much of their capital you want to trade. And for instance, in this case, we can actually go into their website to have a look at it here. We have it here on FTMO, and you can see I've chosen 100,000. And then we can see there are different challenges, meaning that when you sign up to a company like this, for instance, for a $100,000 account, you'll have to pay 540 euro. I'm not sure why it's always euro, maybe because the euro is worth a bit more. But that means that you are paying 540 euro upfront to the company. Here you go, company, take my money. Then you start a challenge. And I should say these challenges have gotten a bit easier over the last half year, 1 year, because right now you have unlimited time with many of the larger prop firms. And should you choose to go into a prop firm like this, I recommend that you choose one that have an unlimited trading period, because it's just 2 months ago FTMO changed this. At this point they had the exact same demands you should fulfill. However, you only had 30 days to do it in the first trading period and 60 days in the second, in step 2 here. And now the reason for this is basically, and I can tell you already, that these companies are not really making money on you trading. They're making money on you being terrible at trading so that you lose and have to buy more of these challenges. Because if we look up here, it is big business. They say here that for now they have paid out 160 million plus $160 million to FTMO traders. But if we look at, for instance, I think it was their 2021 earnings report, they paid out something like, I think it was 30 or $35 million in 2021. But they got in, I think in the area of, was it 400 or $500 million they got in from people paying these challenges. So they are paying out a fraction of the money that they get in. So even though the trades are not really placed, then many of these companies are making a killing. Even though you should be good at what you do and you make 5% 1 month and 5% the next month, then there are plenty of really bad traders that hope they can get rich doing this. And we'll have a look at the numbers in a second, because you can get rich doing this if you're good at what you do. But let's have a look at the challenges first. Unlimited time, very good. The last one, step 3, is basically just where you were funded, and that is where you make your money. Minimum trading days, 4 days. And that is because the company don't want you just to place one trade and then it is a coin flip, and they actually want you to show some consistency, they say at least. Maximum daily loss is 5,000. That means if you at 1 day lose 5% on your account, then they close your account. Doesn't matter if you have been a consistent trader for 5 years with them. If you in 1 day really mess up and you lose 5%, they close your account and say, oh dear friend, start all over. The maximum loss, and that is, this was a daily drawdown, this is a maximum drawdown, meaning if you start with 100,000 and you hit 90,000, then they also close your account. Then there is a profit target of 10%. That means now you have unlimited time. So if, for instance, you're a conservative and you make 2.5% per month, that is doable if you know what you're doing. Then it would take you 4 months to get through step 1 here. Then step 2, it's actually the same, except from the profit target in step 2 is only 5%. So you should be able, with a 2.5% per month, to do this in 6 months. I know a lot of people advertise that they do it a lot quicker, and YouTubers say that they can do this in 3 days, and maybe they can, but they probably burn quite a lot of accounts as well. Now, you don't have to start up with 540 euro. You can see here there is a $10,000 account here that starts with 155, then 25 and so on. But if you, the pricing is a bit different, and there are some of them where you can start even as low as, I think it's $5,000, and it only costs you $49 or something like that. So it is possible to start really low. However, the amount, of course, is also lower up here. What you should consider before choosing the very small one here is that if, let's just say this was dollars and we compare, then for a $10,000 account you pay $155. That is actually more than 1.5% of the account amount you get funded with. Then at 25 you're paying 1%, at 50% you're paying something like what, 0.7%. At 100,000 you're paying a bit more than 0.5%, and at 200,000 you're paying roughly 0.5%. So you could say it's actually getting cheaper and cheaper the larger account you're buying compared to how much you get funded with. But that's just a little detail here. But basically, if you pass the step 1 and you pass step 2, you can basically do it in 8 days. If you're good enough, you just have to trade 4 days in a row and 4 days in a row. So if you get enough performance in these 8 days, you can have passed the challenge in 8 days, and then you are ready to make some money. Let's go back to this one and have a look at some of the potential here. Let's, for instance, say that I get funded with $100,000. And let's say I can make 5% per month. Now, 5% per month for many traders is okay to do. However, you are taking quite a lot of risk on that. So you'll also blow your account once in a while, but then you can just start anew. But if you make 5% the first month that you're funded, your monthly earnings will be $5,000. However, depending on the company, but I think FTMO is 80% most of the time, then you keep 80% of these profits. The company keep 1,000 or 20%, which is $1,000. Remember, this is not really real money, so they're not really keeping anything. This is just a way to cut your income down, basically. So you get 80% of what you make, and that is $4,000. And basically, a lot of people could live out of $4,000. And if you have a strategy where you're only placing trades once per day or a couple of times per week, then the entire building freedom concept is actually very good here, because you don't have to have $100,000 yourself. And if you're good enough, well, then you can actually get 5% or 2.5% or whatever. There are plenty of companies, also quite good companies now. I tend to look for some that have been in the game for some years. They have some very good scores on Trustpilot with a lot of reviews, people saying, yes, we actually get our money paid out. Because you could imagine a very new company coming into the scene. You get a funded account with, let's say, $500,000, and you're extremely good. You make 30% the first month, so they'll have to pay out something like $150,000 for you. If you're a very new trader, or sorry, if that is a very new company and they don't have the cash for it, they simply go bankrupt because you're a good trader, and then you don't get your money. So I tend to look for the companies that are a bit older. And I should say that FTMO is one of the oldest, and I think they are only something like 6 or 7 years old. So this is a fairly new industry. Let's have a quick look at the pros and cons here for prop trading. The pros are, you don't have to have any education. Well, of course you need to learn how to trade, but you don't have to have a large economic degree, somewhat 6 years in university, or 10 years of experience, for instance. No experience demanded. So you don't need to have been a currency dealer with Goldman Sachs for 10 years. Low entry prices. Well, I actually usually recommend people that they start in the lower end. Maybe not with the very lowest one here, but in the lower end. And if they can succeed here, let's say they succeeded with the $25,000 account. If they can make 2% on that per month, that's $500. And then they can use these $500 to buy new new prop challenges, because then they're kind of using the house money to do it. So that is how I usually recommend it, going around it. There are almost no earnings limits, and now they're basically, if you buy yourself maximum in all of the serious companies now, you could in theory get funded with 10, 20, 30 million dollars, and you can just start to pick out the calculator and say, okay, $30 million, 2% per month, that's $600,000 per month. Wow, that's a lot of money. Yeah, but there are a lot of obstacles they put in your way, and sometimes you'll blow an account and you're not making consistent money and all of that. And we know that is how trading is. It is very easy to set up, and you don't need any fancy licenses to trade other people's money. Now the cons here is that there are some fairly tough rules. They have lightened up on the rules lately, but you should still be aware, because there is a lot of rules written with the fine print, where some of them are saying, oh, we won't allow you to trade over large economic events, for instance, non-farm payrolls. Some of them are saying we won't allow you to hold a trade over the weekend, for instance. And if you haven't read these rules, you actually risk being closed down, just getting a notification saying, oh, by the way, you violated one of our rules. We just closed down your $500,000 account, which were making you $10,000, $15,000 per month. That is a bit of a bummer. I know you can start a new one. They always accept you in again. But just be careful. There are some tough rules, and you should be aware of them. Everything can be lost quickly, just as I mentioned. And the rules, the tough rules here, many of these rules are simply there to lower your success rate. For instance, some of them, since they have begun to have this unlimited part here, they will be paying out more money, because more traders, that is at least my theory, more traders will actually get to the point where they get funded, because they don't have to risk so much. However, then some of them are saying, okay, you've been funded with $100,000 account, and we have this scaling program where you can scale up. If you make, for instance, 10% every 3 months, then you can scale up, and we bump up your account to $150,000. Then we bump it up to 200, then to 250. But some of them are a bit sneaky, because they're saying, we only bump it up if you don't withdraw your profit. You have to let your profit stay in there. And that is simply a way of having people keeping their money in the system, not getting it withdrawn. And then they know at some point people will blow up an account. So in the future here, I will let you know how I am doing in my little prop trading adventure. I am, right now, I have 3 prop trading challenges going. I'm quite far in them, so I expect to be funded with the first one here within a month, so maybe a month and a half. But as you can see, the goal for the next 3 years here, and this is on the side, this is outside my YouTube channels and the trading platform, the analysis platform coming up, and it is outside the fund and my investing and the options and all of that. But as you can see, for the next 3 years, the goal is to pass challenges with at least 10 different prop firms, with at least 200,000 each. That will give me $2 million in funded capital. And with a bit of conservative trading going for, let's just say 2% per month, that will yield me $40,000 per month. So that is roughly $500,000 per month, which is actually a decent income. It's not certain that I get here. This is a goal I have, and I will probably be funded with 2 or 3 different companies within the year here, I hope. But I will let you know how it goes. I will show you when I hopefully pass a challenge at some point. And it's not certain I'll show you all of them, because, well, it's something about displaying how much I make and so on. But I will let you in on a big part of the process here. I will not begin teaching how to trade, as I said in the beginning. I'll prefer pointing you in a direction of some very good teachers there, and I will basically just mostly do my own teaching. my own trading here. So that's all for now. I hope this gave you a little glimpse into what the prop firms do, what they don't, what the risks are, and just to make sure this is not for everyone. A lot of people are losing tons of money in this industry every single year. It sounds like a very good deal. Come in and trade for our money. But it's not as simple as that, and it's not in most cases real money. So basically they're just taking your money every time you lose a challenge. So that's it. If you have proven yourself to be a consistent, profitable trader, then I think this could actually be a very good way of building freedom. If you are trading and maybe sitting with a smaller account of 10,000 or 20,000 that you cannot really live off, then it might be an idea to look for some of these more established prop firms. I'll do some reviews of them later. There are many good ones, and all of them have some dark sides, you could say, with the fine print where you really want to be careful. That's all for now. I hope this was educational, and as always, you're welcome to give me some questions, comments below the video, and please hit the like button and all that jazz. That's all for now. Have a nice weekend. Bye for now.